You were told a credit score decides your future. But the truth is more brutal than that. It wasn't designed to protect you or measure responsibility. It was built to divide America into people who get opportunity and people who never will. A three-digit number didn't just change how you borrow. It changed who gets to succeed. Welcome to Origin Core. If you believe in stories that reveal the systems that were built long before you had a choice, like this video and subscribe. Because today we're going to expose the hidden economy behind something you've trusted your entire life, the credit score. Most Americans think this number was invented for fairness, transparency, and trust. But the real story began when the United States was undergoing the most rapid transformation in its history. Industrialization exploded. Workers flooded into the cities. People needed money to buy homes, start businesses, travel, raise families. Cash wasn't enough anymore. Credit became the backbone of a modern country. And when lending became big business, banks realized something. If they could decide who was worthy of borrowing, they could control the future of entire communities. It didn't start with numbers. It started with something much darker. Handwritten ledgers called character books. Shop owners decided who was good or bad, but their judgments didn't come from financial behavior. They came from personal bias. If you had the wrong accent, the wrong religion, the wrong skin, the wrong family name, you didn't get credit. That wasn't economics, it was discrimination dressed up as bookkeeping. And that's the moment the system quietly changed from helping people to filtering people. Banks realized this wasn't just about profit, it was about power. They didn't just want to lend money, they wanted to decide who belonged and who didn't. A system designed for control was born long before the first modern score existed. As the population grew, banks needed more information, more control. Companies emerged that collected personal data and sold it. Not just whether someone paid a bill, but where they lived, who they associated with, who their employer was, what race their neighborhood was. The early credit reporting system didn't judge your finances, it judged your identity. That was the first turning point. America built the foundations of an economy around reputation instead of trust. If you were part of the right group, doors opened. If you weren't, they closed. The score became a wall between people and opportunity, and it was never meant to be fair. When the Great Depression hit, the system tightened its grip. Banks collapsed. Savings disappeared. Ordinary Americans lost everything. The government stepped in not to protect the working class, but to protect the economy, to stabilize the system, and to regulate lending. The solution wasn't compassion, it was control. A national structure to categorize borrowers, to rank them, to protect lenders from risk, and push the responsibility of system failures onto individuals. As technology evolved, the system changed again. Computers replaced ledgers, algorithms replaced opinion, but the intention didn't change. The second turning point came when lenders realized what the credit system really represented. Not just information, but a business model. A model that profited more when people borrowed more. The industry didn't want responsible savers. They wanted predictable borrowers. By the 1960s and 70s, the system got even darker. Redlining. Banks drew maps and colored neighborhoods based purely on segregation. They denied entire communities access to mortgages and loans, not because of risk, but because of race and class. Wealth didn't grow evenly. It was engineered. Opportunity flowed into some neighborhoods and drained out of others. The promise of the American dream wasn't built on fairness. It was built on exclusion. And then came 1989. The moment everything changed. One number, one score, one formula to rule every financial decision in your life. It wasn't designed to reflect your character. It wasn't designed to reward good behavior. It was designed to calculate the risk you represented to the system, a system that valued profit above everything. Think about this. If you pay cash for everything, you're responsible. But according to the system, you're invisible. If you avoid debt, you're safe. But according to the score, you're risky. Because the system doesn't reward freedom, it rewards dependence. This was the third turning point. Your financial identity was reduced to a prediction. How likely you are to borrow, how likely you are to pay interest, how valuable you are to lenders. The score wasn't a reflection of your financial responsibility. It was a measure of your usefulness to the financial industry. And here's where the story gets disturbing. You don't own your score. You don't control how it's calculated. You don't get to audit the algorithm. But a bank can deny you a mortgage because of it. An employer can deny you a job because of it. A landlord can reject your application because of it, and there is nothing you can do. The score doesn't exist to protect you. It exists to protect the system. Over time, the score infiltrated every corner of American life, buying cars, renting homes, starting businesses, marriages, divorces, retirement. It became a silent judge sitting above every financial choice you make. You might think you control your score, but the truth is, it controls you. And here's the moment I want you to ask yourself and answer in the comments. Do you think a system created by banks to classify the public should decide who gets to have a home, a life, or a future? Because that's exactly what it does. The credit system didn't grow because it made people financially stable. It grew because it made them predictable. It forces people into debt so they can repair a number that was designed to follow them forever. This system didn't become powerful because it was fair. It became powerful because it made borrowing unavoidable. The perfect citizen for the credit industry isn't someone who saves money. It's someone who always owes money. And now you see the secret the system was built on. It doesn't measure your value as a person. It measures your value as a financial product. The credit score is not a tool of empowerment. It is a currency of control. So the next time you hear someone say the score protects responsible people, remember this. It wasn't designed to reward the responsible. It was designed to identify who the system could extract the most from. You're watching Origin Core. If you want more stories that expose how the systems around you were engineered, like this video and subscribe. Because it's not just your score that's being measured. It's your every choice.